All right, everybody, we're going to get started. So first, we're just going to review. I apologize if there's any echo, but we're just going to review what we've gone over so far. Most people seem to understand the ones, twos, and threes pretty well, so we're going to breeze right through that. And then we're just going to identify a few different types of continuity and how we explain what we're looking at on the chart. And then we're going to give you guys a little quiz. We'll give you about 5 to 10 minutes to get that done. It's not very long, but it's just going to be questions about what we already know. So hopefully you guys do very well on that. And if there's anything where a lot of people get questions wrong, we'll go over that afterwards to clear up any confusion. And then unlike I did tag and say there's not going to be new material today, but we actually do plan on showing you guys the first part of the actionable signals. And then tomorrow we're going to go over the rest of those. So without further ado, we're going to get started. So first, the ones, twos, and threes and the candle colors. Pretty simple. So this candle's white, but given what we're shown here, what color would that be? Since it opens lower and closes higher, that'd be a green candle. Where buyers are in control, they're going higher. We also have a red candle because it opens higher and it closes lower. So that would be red. Really simple. And then what scenario would this be? And everyone should be saying 1. The next scenario, what scenario is this? It's going to be a scenario 3, taking out both sides of the range, new high and new low. And this would be a scenario 2, taking one side of the range, new high and higher low, 2 to the upside in green. We can also have the 2 to the downside, lower highs and lower lows to the previous range. That's a downtrend, 2 down and red. We can also have a conflicted 2. So this is scenario 2 up because it's made a higher high and a higher low, but it's conflicted because it is red. Sellers are more aggressive. We can have the conflicted 2 the other way, the 2 down, but green. And the other important thing to know is you can't have a 3 without having a 2 first, right? So a failed 2 that is trying to go potential 3 because a 2 can become a 3, right? So this is trying to go 3 to the upside. That's trying to go 3 to the downside. And then when we talk about continuity, we're always going to use 4 time frames. The 4 major ones are the 60, the week, the day, the month. What we can see here is GS on the monthly. It's a 2 up, it's green. The daily, it's a 3 and it's green. The week is 2 up, it's green. And then the 60, although you could say that's a doji, it is we would say that is green. It's closing up. It's not red. So at this point, it's a period of full time frame continuity. All 4 time frames are confirming each other since they're the same color, and it is by definition at that point going up. And the buyers are the more aggressive group. And then the opposite. The month is red. 2 to the downside, it's going down. The day is red. 2 to the downside, it's going down. The week is red. 2 to the downside, going down. And whenever the 60 is red, full time frame continuity down, they're all confirming each other, and the sellers are in control across all 4 time frames. Full time frame continuity down. Then we can also have conflict. So this is how SPY closed today. What we're going to notice is the month is green. We'll also see the week is green. We'll also see the 60 is green. So at that point, the 60, the week, and the month, they're in control. The day is slightly red. So they're attempting to change the color of that daily continuity. So 3 of these time frames are in control, attempting to change that. And this is not full time frame continuity. It is a period of control where 3 of the 4 time frames are confirming each other. We can also have conflict, where we can see we have 3 time frames, the week, the month, and the day, all green, 2's up, going higher. And then the 2 down on the 60. So it's conflicted. The 2 down and red on the 60 is conflicted with the week, the month, and the day, because these time frames are going up and this one is not. I'll get to your question shortly. This is the last slide. We can also have same type of scenario, except the month is green. The day is red, the week is red, and the 60 is red. So we have a period of control where the day, the week, and the 60 are trading lower. Therefore, whoever is buying on the month, we don't know if they're here anymore, right? The sellers are more aggressive and they're in control right now for this week, today, and right now on the 60. So period of control, it's not full time from continuity because that month is green. So that's how we would identify what we know just when looking at our continuity. If you have any questions, ask them now before we get to the quiz, and I'm going to be sharing that quiz in just a sec. We did have one question. So is a 2 more likely to go 3 if it's a red 2 up than a green 2 up? So in order to have a 3, so like if it's a 2 up that fails and becomes a 3, it has to go 2 up and then go red and then become a 3. So you have to have a 2 up and red first. And every 3, that's gonna be the case. You cannot have a 3 without a failed 2 first or a conflicted 2. You can identify it both ways. And yeah, I'll get you in here, Sarah. Interesting. I'm not sure why that is like that. So let me get Sarah in here, and then I will share the quiz. We'll give you guys about 5 to 10 minutes to get it done. Then we'll go over the answers. Were you able to get in here, Sarah? Looks like it. So So the quiz is posted. If you go into the BootCamp chat, you can find that. For those of you in the YouTube stream, I also posted the link there if you're able to click on that. So we'll give you about 5 to 10 minutes. Right around 6:20, which is in about 7 minutes from now, we'll start checking. TFC is in relation to the opening of the current bar. It is the current bar. It's the universal truth of the opening price. Because we want to identify what we know right now. And his question was, is it in relation to the open of the current or the previous bar? It is the current bar. The current bar that is still open. Because once that bar is closed, that group is done participating. We get a new group. So we have around 50, 60, so like about 70% of the people are watching today. So once we have about 70 responses, that is when we will get the quiz open and we'll see how good you guys did. Based on the color of the 3, it's either going to be up or down. And I figured we'd get that question, so I'll make a note of that to fix the PDFs. You're late? All right. So if you are joining in late, there's the bootcamp quiz link above. We're having everyone take the quiz. So the wording, what scenario comes after a three? So similar to what we said in the review, a two can become a three. Can a three become anything? Yeah, if you have any questions about the wording or anything, I can help you with that. I'm not going to give you the answers though. We can go over that once we're done. I think we did miss the three up and down in the outside bar slides, but it's relatively simple. You guys should get it. So that's on us, not on you guys. So when you're thinking about what scenarios can happen, what scenario can a one turn into if it's still open? And what scenario is going to come after a one always? Both of those are the same answer. Yep. Even if it's closed still though. Whenever you have a one, there has to be another scenario that comes after that. Yes. So the question was after a one could be one, two, or three. What scenario has to come after a one? If it's another one, it's still consolidating. It's still the same condition. So what has to happen? That's what the question's asking. Because logically, if a scenario didn't have to come after a one, then then a market would go inside as a one and it would never trade again. So something has to happen. Yep. Has to become a two after. If it was tough, that's fine. This is not only to identify where you guys don't have the understanding, but also where we can explain things better. So this is perfect. We can check. Once we get all the responses, we'll go through it. On the scenario one question, it says, oh, that is on me. We'll be going through it, so it's not like you guys are getting grades. Don't stress out about it too much. Yeah, it looks like it did not save the answer to that question because I did select it. So that's if you're getting the question wrong on what comes after scenario one, it's because there's no correct answer. It just wasn't in the software. So that's fine. All right. So we're just waiting on like about 10 people. And this is my first time throwing this together, so it's new to me too. Don't worry about it. In this case, a 10 out of 11 is a perfect score. So a 1 can come before a 3, but you have to have a 2 first. And we're, as looks like most people are finished up here. There's a few stragglers, but we're going to now go through these. So far, looks like most people have gotten this correct. So if we go and we'll go through the questions. Most people got this correct. So it opens lower, closes higher. So that would be a green candle for sure. Opening lower, closing higher. And then vice versa, everyone got this right. Opens higher, closes lower, that's a red candle. Scenario one, everyone got this correct. Good. The scenario three. We did have a question. So three, it can be up or down based on that color. Simply because when you have this two failing and going to the upside, we'd say that's a two down, but green. So it's trying to go higher. And then when it goes three, that's now going up. Prices now have made a lower low and a higher high. So let's say price was going down before. When this three occurs, it's to the upside because now it's going up. It's making new highs. So based on the color of the three, it's either three up or three down. So that was something we did not have in the outside bar slides. That's on us, not on you guys. But based on the color of the three, you can determine the direction of it. And then everyone got the scenario two correct. And let me duplicate this slide or this quickly just so I can have both of this up here. And everyone got this scenario two down correct, red. You got the two up, determined scenario of a candle on the right. Looks like two people had two up in red, two people put two down in red. So very important. The scenario two up or two down is determined based on is it a higher high and higher low or a lower low and lower high. So this is a two up, making new highs and a higher low, but it's red. So that is a two up red. It should be here. Two up red. And we also had a few people, not many, but a few people did get this one wrong too. Same thing. It's a two down, lower lows, and lower highs, but it's green. So that is a two down and green. And I apologize for the little doji in here. I missed that when I was throwing these together. but most people did get this correct. What we would say is that the month, the week, the day, and the 60 are in control, because they're all green. They're confirming each other. So it's not a period of full time from continuity down, because it's going up. It's a period of full time from continuity up, because all of these time frames are green at that point. Given that this scenario 1 was not red, we could call it a zero, like it's nothing as far as the continuity is concerned, but it's not red. So I'd consider that full time from continuity, because it's not trading below the 60-minute open. If it was, then it would be red. So right now it is not. And then for this one, looks like most people did get this correct. There's 10 people who got the month, week, day are confirming each other. The 60s in conflict, which I can see again with the slight doji in here, where you could see that. But again, based on where it's trading in reference to the opens, it's below all these opens. It's not above this open. So we can still determine that as full time from continuity down. So even if you got that one wrong, I understand based on that slight doji, I should have cut that off. So you had this big red candle here to base your analysis off of. So that's on me again. And then on the next one, it says determine which sentence describes this image correctly. And we got about 80% of the people got this correct. And the correct answer was the month, the week, the day, and the 60. They're in control, confirming each other to the upside. Or the month, the week, and the 60 are in control and confirming each other to the upside. And the day is in conflict with these time frames. So what most people clicked was the month, week, 60 are in control and confirming each other to the downside, not the upside. So very important. These three time frames here, they're all green. So they're confirming each other to the upside. The day is red, so it's in conflict. Where these groups are in control, the month, the week, the 60, they're in control. The 60s, or the day is conflicted with those three. So maybe you just read through that too quickly. And then on the next one, almost every single person got this correct. So in this scenario, the month, the week, the day, they're all confirming each other to the upside, and the 60 is conflicted. So you're going to see they're confirming each other. The 60 is conflicted with these time frames. Everyone got that good. And on this one, the month, the week, or the week, the day, and the 60 are in control, because the week is red, the day is red, the 60 is red, and they're conflicted with the month. So they're conflicting the month, but they have a period of control. Most people got this correct. The second used answers was the week, the day, and the 60 are confirming each other. And in conflict with monthly, the buyer is more aggressive. We cannot say the buyer is more aggressive because at this point, we can only identify this week, today, and right now, a seller. So the buyer is not more aggressive. In the other one, it says the seller is more aggressive. So a few people got mixed up on that. And the second most answered one was the month is in conflict with the weekday and 60. And at this moment, the buyer is more aggressive, which again, not true. Because at this moment, these sellers are more aggressive. Failed or conflicted, it means the same thing. So if it's two up, so this was a question. Using the verbiage of failed or conflicted instead of red or green for scenario 2. A conflicted scenario 2 is always going to be a 2 down in green or a 2 up in red. And the failed means the same thing. When a 2 down fails, it's going green and it's trying to go 3. And when a 2 up fails, it's going red and it's trying to go 3. Yeah, but just making that clear. And then here are the ones. So what scenario is always going to follow a scenario 1? Has to happen. Most people, about 70 or 60% got this right. 30% said no scenarios have to follow a scenario 1. So when we're talking about this, maybe I could have worded this better so that it could be on me. But when we're talking about a scenario 1, what's important is the market. If we'll go to a whiteboard so we can draw this out, make it really simple. So scenario 1 is always going to be inside. of the previous range. That's what a 1 is. So if we have big candle and then a scenario 1, what has to happen after this? Well, eventually you could have a ton of 1s in here, but eventually it has to go 2 in one direction. Has to. So scenario 1 has to become a 2 eventually. This would be the mother bar, where these are all inside of that. So this is still scenario 1, still scenario 1, still scenario 1, and then it becomes a 2. So hopefully that answers the question. The other way of looking at that question has the same answer. If you have a scenario 1 and it's still open, it could be trading, and then it can become a 2. And those are both the same. So it's a similar question, and it has the same answer. So a 1 has to become a 2 eventually after it's closed and you form the equilibrium, or a 1 can become a 2. And then this was the other one. And that question, there was no answer selected. So it says everyone got it wrong, but 64% of people got that one correct. And then what scenario will always come before a scenario 3? And about 70% of people got this correct. The answer is scenario 2, because, and we went over this in the review, if you have a 2 to the upside that's still open, that 2 can go up, fail, and become a 3, giving you the outside bar. So the 2 has to come before the scenario 3 can occur, which gives us the ability to say, when you have a 2 up that's red and it's starting to come back through the previous range, that's attempting to become a 3, because that's the next thing it can do. Super, super important. And then this question, it could have been worded correctly or better. That's why we answered it when we were talking about it while you guys were taking that. It says, what scenario comes after a scenario 3? And the correct answer was none. No scenario can. If you're thinking of it as once you have a 3, what comes after this 3 after it's formed, then yeah, that's not the best question. What I'm trying to get across here is, once a 2 occurs, that 2 can become a 3. And once a 3 occurs, that can't do anything. That's a 3. It's not changing. And the way to remember this is to say, once a 3, always a 3. So once a 3, always a 3. And it rhymes, so you should be able to remember that really easily. That's what we constantly say. So whenever we're trading and we get like a 3 on the day, we say, okay, we don't know now, because now it's a 3. It took out both sides of the previous range. That's what it was supposed to do. So once a 3, always a 3. And then the other thing we say is, you cannot have a 3 without a 2 first. So these are 2 really simple things to remember when it comes to the scenarios. And these weren't gone over in the slides, but hopefully you guys can get that here. And we will add those to the slides and update the PDFs to make sure that is included. So that is on us. So there's a question. It says, but it could still close as a 1. Yeah. So when we're identifying conditions, though, in the market, what we want to think of is this. So if this is 2 up, and then you get the 1, if it goes 1 again, it's the same condition. This is still consolidating, right? It's forming the equilibrium. Instead of it being just 1 inside bar, now you have both of these as a big 1, if that makes sense. So the reason that 2 has to follow that is because if it didn't have to follow that, what would occur is the market would go somewhere, it would get stuck inside the previous range, and then it would never trade again. So when a 1 occurs, we know it has to become a 2 up or a 2 down first. It has to. Yeah, so if I were to reword the questions, I'd say, what scenario can come after scenario 3 that is still open? And I would say, what scenario always comes before the scenario 3, which I think that question's correct, at least in my mind, that there isn't much that can go wrong there. And then what scenario always has to come after scenario 1? It's a correct question. We didn't have the answers in the quiz, but always going to have a 2 eventually. So, regardless of the quiz, the quiz is not super super important, guys. But do we all understand? You can't have a scenario three without a two first. Once a three, always a three. And if there's a scenario one, a two eventually has to follow that scenario one. It has to. If you know those three things, that's what we need you to know from that section. And I can actually type up some notes and I can add that to the stuff that we post tonight as far as just like review. Yeah. Yeah. I could have worded it a little better, but hopefully we have cleared that up. So if you guys are all good, then we're going to hand it off to Sarah shortly, and she's going to introduce the signals. We're not going to be going through all of them tonight, but we are going to be going through about just a little bit more than half. And then tomorrow we're going to cover the other half of things that we look for. Good, good. Yeah. We have review section that we're going to be posting into the bootcamp PDFs so people can go and do that. So I'm going to give it off to Sarah now. And Sarah, let me know when you're ready to start streaming. Oh, sorry, I accidentally left. Retry. And if you have a problem, you can't fix that.
Apparently, it's lost. No screen. Oh, I'm not sharing my screen on Discord. That's why.
Yeah.
Screen, 1 second.
Yeah. The YouTube stream's all good.
Okay, so, all right. So we should be good now. So YouTube stream and Discord stream should be good.
Yep.
Okay, cool. All right, so tonight, like Alex just said, we are getting into half of the actionable signal section because it's quite long. And what time is it? We've already been going for 40 minutes with the review. Pretty happy overall with the review. So if you did get some answers wrong, the material is posted. So in the bootcamp PDFs recording. So if you need to kind of go over it, feel free. That's why it's there. Okay, so contents. What is an actionable signal? Why is it actionable? And triggers. So actionable signal is what we look for in order to create our positions. These will be a combination of candlesticks or a specific type of candlestick that gives us additional information to let us know that we should expect price to move. Why is that? So to create a winning position, there must be a loser on the other side of your trade. Our actionable signals identify losing participants with certainty and thus increase your probability of a winning position. So our goal is to put ourselves in winning positions immediately and sink the losing positions, basically. Signal basics. Each actionable signal reversal signal will have a trigger, which is our entry, and a magnitude, which is our target. So we always want to know those two pieces of information before we enter any trade. What's our entry and what's our exit? And then also what's our stop, which we will get into later. Continuation signals may or may not have magnitude. And that's sort of the measured move type thing, which we're going to cover. So the first actionable signal is a 2-1-2, which is an inside bar break. And they can be reversals or continuations, or like we just mentioned, the measured move, which may or may not have an actual target, but we can expect price to move because of the aggressiveness of the buyers or sellers. Probability of success and some examples. So, an inside reversal. So we have the first thing to note is the very first candle, the mother bar, is green. And then we have an inside bar. And so the reversal is the reversal of the original direction. So the original direction was green, then we have consolidation, and then sellers take over. And so that's the reversal. The reversal is the reversal of the original direction after the consolidation. So our trigger is once this bar opens and trades below the closed one, the bottom of the two is our magnitude or our target. So it's just important to remember that the reversal 212 has opposite beginning and ending colors. So this is a bearish 212 reversal because we're reversing the original bullish direction. This is a bullish 212 reversal because the original direction, as we learned, the open is up here, the close is down here, sellers were in control, they consolidated, and then reversed. So again, we enter when this candle is open. Once it trades above the inside candle's high, our target is the top of that previous two, because this is going to kick out shorts, because anybody who is short during this candle or this candle is going to have to cover once we make a new high. And we know that because we know where people put their stops. So this is a 212 continuation, and it's a continuation because the first and the last are the same color. So we are continuing the original upside direction after consolidation. Okay, same thing, same trigger, same magnitude. And this is a 212 bearish continuation because the original direction was down, consolidation, continuing the original direction. And again, entry, target / magnitude. We use those words trigger and magnitude kind of simultaneously. Yes, the ones can be any color. It's just a consolidation. So we don't want to trade within it. So it could be red, it could be green. It doesn't matter. What matters is the continued direction. The inside bar continuation is most commonly used as a measured move where you have a large move followed by a brief pause. That's your inside bar. Then followed by an equal sized move. Probability, when looking for high probability setups, reversal. Alex, they're telling me the stream ended on YouTube.
I believe the stream has ended. Here's
Okay.
here's the link though for anyone that got kicked out. It's in the boot camp.
Okay, sorry. It was distracting me. Sorry. All right. Okay, let's start this probability part over. When looking for high probability setups, reversal patterns will always have a higher chance of success because when you trade back through a previous range, you have traders on the wrong side of your trade. And that's what we're always trying to do. We are always trying to play against the losing traders. When playing continuations, you are looking for the continuation of the aggressive buying or selling. So therefore, we're on the right side of the move, the big money. We're playing with the trend. So you're at the will of the aggressiveness of the current buyer or seller. Once a continuation makes a new high or a new low, we say we don't know if it will continue because that puts us at exhaustion risk, which we will get into later. A measured move example. Let's see if we have any. I'm not sure. So here's an example of a 212 bearish reversal because we had a green 2, an inside bar. Again, the color of the inside bar really doesn't matter to us. It's just what happens after the consolidation. So again, this could be green or red. It doesn't matter. But the entry still is a break below the inside bar, and we're targeting the low of the 2. This is an example of a 2-1-2 bullish continuation where the original candle was green, and then we got a new weekly flip and they stayed inside the whole week, and then we got a 2 up. So again, your entry would be long above the inside bar, and we're targeting the top of the 2. Okay, here is basically an example of a measured move. This
No.
is no. It looks like it.
I don't.
Oh, okay. It kind of looks like it though. Because this is such a doji and it looks the same size as this. But wait. Okay. Well, 2-1-2 reversal because the original bar was red, inside 2 up. And this is an example though of not actually having targets because you were at all-time highs. But as long as it's still good, it was still good, but then it wasn't still good. NVIDIA monthly. This was such an amazing thing with the domino in the week to trigger the month. Anyway, 2-1-2 continuation. Up again at all-time highs because we were just at all-time highs. So again, we don't always have a target if you're trading up at all-time highs. And me personally, I don't like to trade up at all-time highs. I'd rather find something with a target, but that's just me. Okay, let's see if anybody has any questions real fast. For the 2-1-2 reversal, would it be better if the first bar actually cleared some... No. So inside bars are not going to like actually clear any kind of liquidity. They're just an inside bar. Okay, let's do 2-2 reversals first because we haven't gotten into that and there's questions about it. Alex, this slide seems to be not right. Oh, so we need to delete one of the slides under 2-2 reversal.
Yeah.
Okay, so we've got 2-2 reversals, compound threes, and examples. So a 2-2 reversal, and this is why it's so important that you guys understand what a conflicted 2 is, because once we have a conflicted 2, we can expect a reversal. So these are both examples of 2-2 reversals. So this is a 2 up, but it's red. So that is a failed or conflicted 2 up. So the original intention was for the buyers to keep stepping up, but they didn't. They failed. The bears took over. Continuity took over. It became red. So then we know that once we fail the upside of the first candle and start to come back through it, we're going to the other side of the range. And we're going to learn about compound threes here soon, but the trigger is a break below the 2 up, and then we're targeting the bottom of the original 2. Okay, so this is a 2 up, 2 down, bearish reversal. This is a 2 down, a failed 2 down. Why? Because it's down in green. And that is not what the bears wanted. They wanted it to stay red, continue down. Well, that's not what they got. So green 2 down, we're entering long right here, and we're targeting this candle's high. And then you'll see these 2 bars become an outside bar of that one, which is, I'm getting ahead of myself because that's on the next slide, but it's hard not to, it's just hard not to, give you guys everything. A compound 3. So just like the picture above, like this one, the 2 up, two down, if you were to blend those together to make them one candle, like we've done here, you'll see that this is a 3, right? Because we have higher highs compared to the previous candle and lower lows. And that's what we're always looking to do, is to find our compound 3s and find the losing participants and hit them in the face, really. And the same thing with let's go back up to this one. We have a 2 down in green and then a 2 up. These 2 bars become an outside bar of this, which you'll see here. We just blended them together. So blending candles together or anticipating what's going to happen is going to be your best friend. But this is now a compound outside bar. And a compound outside bar means it just took more than one candle to create an outside bar. So here you've got an example of a SPY weekly 2 up. This is not a conflicted 2 up, and it doesn't have to be. We just care about what's happening right now. So this is a 2 up. The next week we got a candle flip. We opened. Once we trade below the 2 up, that's where we're going short, and we're targeting down here, which it didn't hit target on the first week, but it did on the second week. And sometimes that just happens, especially in like low volatility environments. But this is an example of a 2 down, 2 up reversal, and target being the top of the 2. SPY yearly 2009. We had the market crash. I guess this would be 08. This would be 09. I wasn't trading back then, but so green 2 down, conflicted 2 down. The 2 up reversal happens here. The magnitude is to take out this and then this. And you can see again, it didn't all happen in just one candle. We prefer that it does, but it doesn't always happen in one candle. But still, it hit the target, right? So now all of these bars are an outside bar of that. So you're going to have to practice blending candles with your eyes, which you will. You will. It takes a little time, but you'll get it. What is a rev strat? There's multiple different kinds of rev strats. We have a 1-2-2, a 1-3, and a 1-3-2. Okay, so a rev strat is any inside bar followed by a reversal. So a 1-2-2 rev strat always begins as a 2-1-2. Because we have, like we were talking about in the quiz, we have to break the inside bar consolidation at some point. So there's always going to be a 2 after a 1. We look for these because we can identify a losing participant that is being countered by more aggressive participants. This is because the equilibrium break is getting reversed, thus creating a rev strat. So this means whoever shorted or longed the equilibrium is forced to exit. So for example, this is a 1-2-2. So you have your inside bar, your 2 in a direction. We have bearish and bullish rev strats. But still, the same logic applies. You have an inside bar, a 2 down, and the thing about these, they don't always have to hit magnitude, but in this example, they do. But again, being countered in the other direction by the next 2. And still, if you can visualize, here's your mother bar, right? We took out the lows and then came back through. So these 2 bars right here are an outside bar of these 2 bars. So again, we're always looking for the compound outside bar. Here's a bearish rev strat where we were inside. The consolidation broke to the upside. It did take out the magnitude, fell back through. So we're looking to short here and then what? Become a compound outside bar of the mother bar. So that's where we would enter short. That would be our target. A 1 bar rev strat. A 1-bar rev strat is just a 3, and they happen when they're live, and we want to catch them when we're live. So you have your inside bar, okay, and they took it to the downside, maybe or maybe not hitting magnitude. In this example, they did hit magnitude, but what's important to note is when we start coming back through the inside bar range, and technically the target is here. And then this one just gave you some more. I think we might have something to talk about there, but
the first, I say the first target is there. The magnitude would be still in upside.
yes. So T1, T2. And then same thing up here. The inside bar consolidation broke to the upside, started falling back through the previous candle, whether it's a day, an hour, a 30, it doesn't matter. The point is we've fallen back through, we've changed continuity. Target 1 would be to become an outside bar. Target 2 would be to take out the mother bar. A 1-3-2, very similar to a 1-2-2. Same situation though. Inside bar broke to the downside, went outside bar. So the sellers aren't here. The buyers stepped up and then they continued that direction, becoming an outside bar of the mother bar yet again. Same thing to the downside. Inside bar broke to the upside originally because we know how red candles form, fell back in, coming back into the inside bar, going outside bar first, and then continuing the direction down. Actually, this would technically be a 3-2 reversal because that's red and then that's green, but same stuff, same everything. We're trying to become an outside bar of the mother bar. So here's an example of a 1-2-2 bullish rev strat where you have your inside bar, your 2 down, which takes out this and this. Okay, so if you were short, that's where you would exit, and then you can flip long once we go 2 down, 2 up, and then your magnitudes to take out that, which it did. So this was really nice to the downside and then to the upside. Cat weekly, bearish 1-2-2, inside, 2 up, took out the magnitude. Then we got a 2-2 reversal right here. Magnitude was to take out this, and it did its job. LRCX monthly, inside bar, 2 down, took out the magnitude. And again, when we're playing 2-1-2s to the downside, we want to be taking profit at our targets, and then that's when we can look to flip and play the other way. So then you got your 2 down, 2 up reversal, and then target 1, target 2. Beautiful. Weekly, what am I looking at? A 1. All right. So this would be a 1-3-2 continuation. So inside bar, 3-2 up. No, not a lot of magnitude there, but still good. Adobe 1-3. So this is a gap up. This is kind of a gapper. So gapped up, started coming back through the previous candle's range. Again, target 1, target 2. Big mother bar of the previous mother bar and the inside bar. Oh, I guess I feel like we've already done a 1-2-2 bullish. I don't know if this is extra or. All right, but I think it's back to Alex to cover the hammers and shooters. section. Let me hit stop. Hold on, let me hit. So I need to hit stop streaming.
Give me a second here. All right, give everyone like 30 seconds to make sure the streams are all good, and then we'll get started. And this is going to be the last signal that we have today. All right, we should be good to go. So last one we have today, before we get into it, with the rev strats, there was one question, and the question was, it's a failed inside bar break. And that's exactly what a rev strat is. That's why we look for it. Because this break, once it's hit the target, this is a 2-on-2 continuation. This is why we say continuations are less likely to work, because we know this happens. And what's occurring is you have a seller that comes in, then they go inside. So they're doing nothing or some profit taking. And then they come back and sell again. Once it's made that new low, we don't know. That's what we got to when we're talking about the 2-1-2 continuations. We don't know once it makes that new low. So when we're using our multiple time frame analysis, if we make the new low and then it starts reversing on lower time frames in here, we can expect a potential rev strat. So we can actually set this signal up and then take more positions when this triggers. We have not gotten to entries yet as far as position management, but that's something we'll talk about when we get to multiple time frame analysis. And so that's what we're looking to do. And the question was specifically, isn't the first trigger wrong? And like, yeah, technically it is. That's why this is a setup we look for. Because these guys who got short, they're wrong. When this triggers above that, they have to buy to close. Since we know they did break out short, get short into this, because we know the equilibrium tells us they agreed on price, and then they took it lower. So a seller did come in here and get short, and they're wrong when that triggers. So like we said when this started, we are constantly looking to trade against losing positions. So this right here is a losing position. And that's why when this trigger occurs, we don't have reason to believe that shouldn't work. So just to clear that up. Now to the hammers and shooters. So first we're going to cover what it is. What is a hammer and shooter? There's two types. There's the normal and then a momo or a momentum hammer and shooter. And then examples. So first, hammers and shooters are actionable signals that tell us of potentially trapped shorts or longs. These are not a universal truth like the 1s, 2s, 3s, continuity, and other reversals, because we cannot know for certain if there are trapped longs or shorts. And these candlestick formations can be used in addition to any signals we've already talked about. They also allow for tighter stops when we get to the stop section of the course. So first, the normal hammer and shooter. You're going to notice it's the same. It's a 2 down, 2 up reversal here. What's important is that we have a hammer signal. And what a hammer is defined as a long lower wick with the body closing in the top 33%. So if we separated this into 3 sections, the top 33% of that candle is where the body opens and closes. And what this tells us is sellers did come in here and they sold it down. And then they were countered by buyers, creating the hammer. What we don't know is if those sellers stayed short or if they were the ones taking profit to create this hammer, which is why it's not a universal truth. And then you're going to see we can also have a shooter. It's the same thing, but the opposite, where it went up, came all the way back in, and potentially trapped guys who try to get long in there, right? People who buy the breakouts of new highs, they're trapped in here, more than likely. And then once this triggers, we're looking for the same 2-2 reversal magnitude, where these 2 bars become an outside bar of this, just like the 2-2s. It's the same exact thing, just the hammer and shooter being different. Now momentum, or momo. The difference with these is it's not a reversal. So what you're going to see is it's continuation, where they have a 2 down, another 2 down, except it's a shooter. And what this tells us is potentially there was either short-term profit taking or poorly timed long positions where people got long in this and then they were proven wrong when this comes down here. Simultaneously, when that's occurring though, what it's telling us is the sellers are coming back in. So they're aggressively selling it back down, countering whoever is trying to get long. And potentially there was just some profit taking here because it never reversed. So still going down, lower high and lower low. Once this triggers, you'll notice there's no magnitude because it's continuation. So we're going to use this when we have really strong trends. Like if you saw NVAX on the other day, that was a good example of something like this. And then the sellers come in below this, it's just got to go. And we'll talk about stops and stuff, but the stops on these are pennies, very, very tight stops. Now the same thing can occur with an inside bar continuation because a 2 down is a continuation, and a inside bar breaking in the same direction as its mother bar, also a continuation. So they're both considered MOMO or momentum. This is just an example of the measured move, where you can see they get a large move, then you get a brief pause where they go inside and consolidate. This wick down here, what that symbolizes is either profit taking, short-term profit taking, so no reversal, or poorly timed short positions, people trying to short this prematurely. And then it comes back up. When this trigger occurs, anyone that got short in there, they are getting continued against. The buyers are coming back a second time to buy again. So we look for a similar sized move of the previous move. And what we would do is measure from either the lower high of the candle, or you can use the open and close. It depends on preference. It's up to you. And this is not done in a vacuum. So you can't go in and just trade every single strat scenario. We also have to use the multiple time frames and time frame continuity and the third universal truth of the broad informations, but we will get to that. So just recognize the 2-1-2 continuation with the hammer, Momo hammer. And now some examples. So there's 2 examples here. GPS. You'll see the momentum hammer here. This was a 2 up. Notice the hammer. They got short, and then a buyer stepped in, or those guys closed their shorts, comes back up. So this is momentum hammer, 2-2 continuation above that. And then they continue for 3 candlesticks, dailies, so 3 days. And then notice the 2 down hammer right here. So what this represents is people getting short because it reversed. When it goes 2 down here, people are getting short. We're also stopping people out, anyone that was long before. So once this hammer occurs, it tells us that there's poor time short positions in here. And we also have a magnitude because when this goes 2 down, 2 up right here, the magnitude or the target is to make the new high here and stop out anyone that's short. Then you can see they continue. If we go to AFRM, this is an example of a measured move. This was on earnings, I believe. They go 2, big 2, and then 1, creating the Momo hammer. So we look for the measured move, a similar size move to this move here. Then you can see they break the 1. They went instantly, and I can tell you that because we were watching it when that occurred. Then up they go. And they actually gave more than what the measured move was. This was during the COVID crisis when SPY was puking in 2020. So you're going to see we had this was a 2 up and then the 2 down reversal. So they're going down. And then you get the 1, Momo shooter. Then you get another 2 down. So a 2-1-2 momentum continuation with the shooter. And obviously you can see there's a lot of wicks in here. This is the really high volatility where we're on the lower time frames. Because when this is moving plus or minus, $60, $40 in a week, then we can go in there and we can make hay because we know when that occurs, we can drop time frames. And then here's an example of a 2-2 Tesla on the weekly. And this was something Sarah traded, I believe is 2 months ago. You had the 2 up shooter telling us that goes on our weekly watch list going into the new week. And then below this right here, our magnitude is to take these guys out. The 2-2 reversal with your shooter. And that is the last example here. So if you guys have any questions, we can get to those here. I do have a note here to make sure to read those out loud before I answer them. So I'll make sure to do that. So the first question is, does the color of the Momo shoot or hammer make a difference? The color does not make a difference. What's relevant is, does it close in the bottom 33% or the top 33%? And that's relevant because we're scanning for this. We don't have to pour through charts like most people. They're going through charts and looking at 300 charts a night. We can just scan and we can find that right there because it's very simply defined. So Sarah wouldn't trade SPY today because of all-time highs. Yes. So when you're going into all-time highs, what's happening is there's no one to be short against your long position, if that makes sense. So what you need is something like Tesla or Nvidia, a very aggressive buyer, because then it doesn't matter. They're just buying millions and millions of shares. It still goes up. And the way you identify that is continuity. Do you have bright green bars into all-time highs? If so, then it doesn't quite matter. What matters would be the change of your continuity. If it changes, like SPY did off all-time highs in COVID, then you got problems. Momo Hammer with a potential measured move. Let me see. Yes, so that would be an example of a Momo Hammer. The thing is we do not want you guys going in and trading these right away, because these setups, they're all in relevance to all 4 time frames. So we want you guys to be able to identify these setups, and then what we're going to do is we're going to use all 4 time frames to have as many of these setups in our favor as possible. But yes, that is correct. You have the Momo Hammer on Microsoft on the daily. And I believe Microsoft is still an inside week, which is where you could have some potential issues. So does it work? Let's get into it. I'm a futures trader. How can I apply some of these concepts to futures given that scanning isn't relevant? What time frame would you recommend looking at, etc.? So once we get to the multiple time frame analysis section, then we'll have all those questions answered for you. I don't want to confuse too many people talking about that stuff too early, if that's okay. But as far as what time frames, we're looking at all 4. That's why we're practicing continuity first. You want to be able to identify these across 4 time frames or more. The next question was, does the strat work well with scalping versus larger time frames due to lower magnitudes on the lower time frames? So when we're using these to make trades, we're not only looking at one time frame. So yes, the daily magnitude is only to take that out. But what was happening when AFRM did this is the month and the week were bright green, and they were going to a higher time frame target, which is why it continues so much further. So when you're scalping, what you're actually trying to do is take reversals on the lower time frames, confirming higher time frames with bigger magnitudes. So although the smaller time frame magnitude might look small, if we know on the month, the week, you have long green bars and a very aggressive buyer, it can go a lot further than that magnitude, which is why we want to be able to identify full time frame continuity in either direction, because it tells you it can go a lot further than you expect. So like AFRM, for example, if we took this here off the trigger, we're going to hold that until it reverses. And once it goes 2 down here, that's the first point we would think about reducing that position. And since it's so far up there, we actually don't have to if we don't want to. Yes, and thank you for reminding me. That's awesome. Thank you so much. We actually do have a cheat sheet, and this is where I'm going to share this. It will be in the PDFs and stuff tonight, but the cheat sheet will show you all of these in one image. So you'll see that right here. This is every reversal and continuation we've got. There is some that we have not covered yet, such as the 3 2s. And there's a few other ones that are not on here, like the pivot machine gun and stuff. Just couldn't fit it all on one page, but these are what we're looking for. So what we suggest new stratters do is you either print this out or make it like your desktop background somewhere you're going to see it every day, so you can really familiarize yourself with what you're looking for. And there is like some colors in here we could change, but I'll share that to you guys in the PDFs section. So the question is, when you exceed your target, there's no apparent nearby target in your time frame, do you just go back in the current time frame to find the next higher time frame target? GME today is blowing away the high from 6-3. Yeah, so we'll dive into the charts a little bit, because GME is a good example of a 2-2 reversal. So GameStop, everyone's talking about it. Why not us as well? Let's see. Make sure we got this here. So given what you already know to be true about current price action, what can we identify as far as how GameStop traded this week? Well, it started as a gap up on Monday, and they sold it down Monday. At that point, what were the opens? Well, the week, the day, and the month opens were the same. So we have the least amount of information, but we can identify a strong seller in there. So if we go in and look at the 60 basis Monday, you see they definitely sold the first 60 of the day. Now, as far as gappers go, this is why we use multiple time frames. If you're watching this in the morning, you'll see on the 5 minute, the 2-2 reversal right here. It occurred after it got halted, so that's why there's a gap here. And then you'll notice your shooter right here. The 2 up, 2 down fiver, you get to play that short. And you can see when it's really moving, this is where the scalping comes into play. 13% scalp in 15 minutes, given that you'll notice it's already dropped 24% and you have bright red continuity. You can take that expecting that it may go further than low day because they've already shown willingness to sell. Then you get the 2-2 reversal here, and that's how you know to get out. And then you can see they get stuck, mother bar, all this stuff stuck inside of that, which we'll talk more about the broad information, how that works in the future. So we're not going to worry about that now. Then we'll see the decoupling. The second day of the week, Tuesday, the day separates from the week and month opens, giving us new information. What can we notice on Tuesday? It was a 2 down, but green. What is that hinting at after what we've just talked about? Well, that's hinting at a 2-2 reversal. At that point, what was the continuity? Well, the week and the month were red, but since we only have the monthly, the week and the month are coupled, we only know what the monthly guys are doing. What we know is that can change because we only have the month red at that point. That's all we know about. So the 2 down and green occurs. Now we ask ourselves, the 2-2 reversal day right here, when that goes in force and it's trading above 2801, the trigger level, what is the target of that? The target of that is to take this out, 40.51. So when that occurs, what would change? The month would go from red to green. So now the monthly group, whoever was selling before, they have to buy to close. They have to cover. Because that monthly group was selling before, now they're forced to buy. And that's what you can see happen at the close today. So as far as intraday goes, what you'll notice is they close the day with a Momo hammer. If we go into yesterday's action, what you'll see is here, you'll notice they take the day in force above 2801 and they never come back. Meaning if you took that, we would manage it with break-even stops, which we'll get to. That you get to hold that. What you'll notice is you get corrective activity where the 60 is against the daily. It was the 60 in the month. So that is relevant. We don't know what the weekly guys are doing yet. They did that for 60 minutes, created the hammer. So what just happened? They stopped out anyone that was long with tight stops here. Create a hammer actionable signal. What do we expect? High a day here. Why can that potentially go further? Because the magnitude on the day is to take that out. So we're confirming what the day is doing with our signals. The same way we say that the 60 is confirming the day, which is confirming the week and the month for full time from continuity, we can say that signal there confirms the daily signal. And we'll get to that once we get to multiple time frames and we can talk more about that. But hopefully you can see that the concepts of continuity also are going to be applying similarly to our signals. So when the 2-2 hammer goes in force, you're looking for high day. Until that reverses, all good. Then you get the inside bar momentum hammer add here. And then up they go. You can see 11:30. So this was in the morning, 9:30 in the morning. So they started the day 2 up. They went 1, 2 up continuation. Then boom, they blast off and take your daily magnitude, negating the month, negating the week. So now where's the weekly magnitude? Well, it went 2 up, 2 down, 2 up reversal. It went 2 up again. So where's the week trying to go at that point? There. So hopefully you guys can see that once we get to it, I don't expect you guys to understand this all right away, but once we get to it, we're using all time frames. Every time frame matters to us because the more signals that we have across each time frame, the more evidence we have that signal and that entry should work. And the better the continuity, the more reason we have to believe it can go a lot further than whatever that target is. As you can see here, and that day goes blasting off. Because when the day gets up here to change the month, notice the daily continuity. It's up 27%. Who's to say it can't get greener? Because when it does that, you still have 3 hours left in the day. If we go on the 30 minute, you'll notice this. The 2 up, the 2 down, stopping people out. This is corrective. The 30 is red against the daily. and then the 1. What has to come after a 1? A 2. Right here. 212 reversal, which is a signal we want to take. Even if you didn't take the entries in the morning, you can do that right there. And you can see if you're a scalper, boom, 13%. So really, really good examples of what we look for as far as signals and all that stuff is concerned. Five minutes still too fast for your brain? Yeah. For new people, once we get to the trading part of it, we're gonna have a trading plan, like we advertised. We said it's gonna personalize itself to you. We suggest people all start on the same trade plan so you guys can familiarize yourself with how the signals work and what the conditions look like when you're trading. And we also suggest very small size so you don't get killed when you're learning that stuff. So, SPY 2009. Let's go to it. So, first, what I would want to do is I would want to draw out the broadening formation, which we haven't gotten to yet, but it'd look like that. Notice 2 up, 2 down, that's your crisis with the shooter. Did that tell you of that before 2008 even opened? It did, right? So you're expecting the short in 2008, and then boom, they make the new lows to this, stopping out anyone that was long before. Then the 2 down, 2 up. Why does that not go to its target right away? And what can we expect, or what are we thinking? Well, when we're looking at reversals, given that we know the magnitude of where it's going, what we say is if this goes 2 down, 2 up, it's going there definitively, because we can know that right here, 146.99, it's going there. And then ideally we want to see the other side of that too, 157.52. Now, how do we know if it's going there or if it has reversed? Well, if it reverses by going 2 up, 2 down against you, then it's reversed. It's no longer going there. The magnitude would change and it'd be going down here. So what we can say is if this 2-2 reversal does not get reversed, meaning there's no 2 downs that follow it, it will go there. When it goes up and does not do that right away, what we say is it ran out of time because the yearly signal lasts a year. So what we need to see is another 2 up. And then same thing, runs out of time. This, we could call this a Momo hammer. It's not quite because it's not in the upper 33%, but it's going to have a similar meaning where people potentially get short, people get stopped out, and they close like that. Then it goes 2 up here. That's still confirming this 2-2 signal. So like we talked about with the continuity where each new week will either confirm or negate the month, and each new day will either confirm or negate the week. Each new year here is either going to confirm what the previous year did or negate it. So unless it goes 2 down by taking any of these lows out, it's still confirming that. So every time it goes 2 up, reconfirms the year magnitude of going there. Then it goes 2 up again, reconfirms that it's going there. Similarly, down here, when this goes inside bar, 2, 1, 2 reversal in 2004, every time it goes 2 up, it's reconfirming that signal. And what we would say is that's still good. So until that gets reversed, still good, still good, still good, still good. 2-2 against, now it's no longer good, right there. So when you're at all-time highs, truly, no strategy is going to give you really good targets there. And with the strat, we just put it blatantly that we don't know. What we can know is still the 3 universal truths. So if we go to like NVIDIA, for example, it's going into all-time highs this year at the beginning of the year. What can we still know? Well, we can still know our continuity, which tells us who's more aggressive. When it's bright green and it's up $100 to start the year, what we say is green can get greener. You have full time from continuity. So if we're looking at this, once we go into the all-time highs, we don't know as far as targets go, but what we can know is still the continuity. So as long as this month doesn't get reversed, inside and up, still good. 2's to the upside. And then notice the 2-2 reversal last month here. And then up they go. And they're still confirming that. As far as like, how can you then expect, like, are you going to be buying all-time highs in here? What you need is corrective activity. So in the case of NVIDIA, it's really obvious. You have the 2 down month, it stops people out, and now you have magnitudes to target back through these guys. I believe they did that on earnings, or at least some of it. Yeah. So you can see they go 2-2 month here, 9/22/25. And then on earnings, really good, up they go. So whenever things are really going like this, eventually they will have to stop someone out. And the same thing's going to happen on your daily time frames. So when this really started going at the beginning of the year, you'll notice you get your inside bar signal, but that's a continuation. So it has a higher likelihood that that's going to not work. So 2-1-2 up, 2 down, 2 up reversal. They did it on a gap, but that's still 2-2 reversal. So this is how we'd want to be getting into that. And then similarly, 2-2 in here. Then you have the rev strat in here, does what it's supposed to, and then 2-2 against. And then 2-2 back up in here. Yep, good. So when we're doing this, what we would be wanting to do is create the position. And if it doesn't get stopped out, hold it. Because if we take a look at our continuity, the continuity is super, super important for us and how we hold positions. When the continuity looks like this, where it's very, very green on the month, what we say is like the monthly group's buying. They're buying this month. And like we had said, the monthly group is drawn one open for each month. So it's not just all the daily time frames put together. It's one open, which means the monthly group is in control overnight. So during the overnight sessions, that's why we get the gaps up, because they're buying in the pre-market, they're buying overnight, and you also have NVIDIA, like other, what would you call it? Like, it's not just the New York Stock Exchange. There's other exchanges that can be traded and all of that fun stuff. Like similarly how there's like CFDs for people trading Tesla and that trades 24 hours and things like that. There's things like that for NVIDIA. So what we just want to identify is that they're buying it, and if it's on a monthly basis, that's in force overnight. Similarly, the week is in force overnight during the week. And then the quarter and the year as well. So like SMCI is a great example. On the quarter, this is something we picked out on the nightly vids. Notice you're right here. So it's not quite a hammer, but it's a similar concept. It's a doji. And we did not cover that one. Maybe we'll cover that one tomorrow. I think we will. But you can see the 2 up, 2 down, slight lower low. And then when it comes back into this 2, where's it trying to go? Failed 2, go 3 to take this out. And then you get the big move. Boom. And then you'll see this quarter, they're no longer buying. We can't identify the quarterly buyer. So they trend. And then before they really get going, they give us our entry. Super, super cool. The video, wait for corrective activity. Yeah. And the thing with corrective activity is, like when a day closes red like this, or not, that's a week, I mean. When the week closes red like this, what that tells you is people can be short. And they can be short against this week's highs here. So this is considered corrective, but not on this time frame, because this is a 2 to the upside. What it tells you is that there are people short in here. You can see on the daily. So you get the corrective 3, then you get a 2 down, 2 up reversal here, and then they go up the rest of the week. And you'll notice Momo Hammer right here going into Wednesday. And this was also on our nightly vids Tuesday nights. So during the day on Wednesday, you had this signal in force all day to go after it. They close out at the highs. So on an intraday basis, it tells you you can go in there and you can play. Notice the hammer here. This is a 3-2 hammer, and it's actually a rev strat. You'll notice the 1, and it's equal highs, and then the 3 hammer, and then the 2 here, and then boom, blast off. And you'll see they have no magnitude. But why can you do that? Because at that point, the buyer's really, really aggressive. It's up 1% on the day, and it's up, however many percent on the year, 100%, whatever it is. And then still good. Gap up. And then gap ups we haven't talked about yet, but gap up sell, that's something we look for. And you'll see here this morning, the 2 up, 2 down, 15 minute, and then boom. They really take some of them out. Hold a contract deep in the money. So we'll get to that type of stuff. And I know a lot of people are going to be doing different things with options and shares and futures and whatnot. So once we get to how, like what positions you can take, we'll talk about it. It's not going to be like a one size fits all, but we'll have a big conversation. We'll probably sit on here for like an hour or two and answer a ton of questions about that once we get to it. Yep, that is going to be one of the sections. And if you're looking at the strat and you're like, wow, we can gauge the magnitude of where it's going to go, and that would be great for options trading, that is absolutely the way you should be thinking. Because if you can go in here on NVIDIA, which I don't know if anyone did that today. Personally, I was not watching this. We were watching like staples and other things. But when NVIDIA gaps up and then two up in red on the 60 here, you can gauge the magnitude and you can say it's going to go here. 1216. So if it's going to go from here to here, $24, you can look at the options for Friday and say, well, maybe those are pretty cheap for how big that could move there. So as far as strategy goes, we have that. It's coming at the end of the course. We want you guys to understand the concepts and be able to see the things that we are seeing before you touch any money stuff, because we don't want anyone to go in there and just get killed without understanding this stuff first. We will not let you guys go in there and just get killed. Why are the daily bars all red? Because today we're below the daily open here. This is a 60 chart. But you can see our continuity. So the day in 60 sellers, they're in here this morning. Then you had a hammer, an inside bar with equal highs to the hammer. 212 reversal, where the 60 week and month were given control back. And then they're back into this 3. So they're taking the lows out, failing, trying to take the other side. Yeah. Everyone's very excited. I know. We don't want to get you guys killed. This one is actually private. There is one if you go to the scripts and scams section in the Discord, which I'll link here for you. Go in there. There's one for Trading View by TFO. Yeah, we don't want to get too ahead. I don't want to confuse anyone. So the last question I'm willing to take here, unless it's about what we've covered today, is volume ever a consideration? It's not. Because what most people do with volume is they'll say like, it was a low volume day. We need more volume to do whatever. It's like, well, if it's like an inside day and it's low volume, it's an inside day, right? It doesn't matter how much volume it has, it's still a 1. So not quite relevant in that sense. And then as far as gauging magnitude, like it doesn't matter how much volume NVIDIA has. It had full time from continuity. Where if we look on the month, like the full time from continuity, the monthly continuity changed here. This is where the institutional group started taking the offer at 844. Doesn't matter how much volume there was. That's just true. That's the case. TFO previous close for values. If it does, then we might have to tag TFO and let them know. If you can share in the BootCamp thread an example where it's doing that, and I'll make sure to set it to them. Yeah, that's not good. It shouldn't be doing that, so I'm not sure why it is. So, do you guys feel pretty comfortable so far? I know we did go over a lot of scenarios, but we will have all the PDFs there, and I'm also going to be sharing that big template that has all the different reversals in there. It's missing one, or actually wait. Yeah, it's only missing one thing in there, so not too big of a deal there. A lot of clarity. Good, good, good. Really good lesson. Thank you. Good. Well, thank you. We appreciate the feedback. Yes, I will try and make sure. I believe PDF would be the highest resolution I can give you, right? You can check that and get back to me. So, all right, this is the last thing I'm gonna. It's not about the content, but practicing on bar replay. One problem you will have with that is it will not replay all 4 time frames for you. On Thinkorswim, it may do that. I haven't really messed with that for a couple of years, but that is one problem you may have. There is certain softwares, I believe they're paid, that will allow you to do that. If we need that, or if you guys feel like you need that, we can. But as far as bar replay is concerned, since you can identify the scenarios after the fact and they don't change, you really don't need it. You can go back and you can just scroll through the charts. Yeah. You guys are going to love once we introduce the broadening formation, so you know which signals to be taking. You're going to love it. But if that's all, then that's all for me. We're running about 10 minutes over. All right. Yep, we're going to end it off here. And tonight's homework, I'll have it posted. It's just going to be identify. I want you guys to go in and identify as many setups as you can. And that's going to be the homework tonight. So hopefully you guys had a good time, and I'll see you guys tomorrow night for the rest of the signals. And then if we can get into other things, we may, but that's going to be the plan. So adios and have a great rest of your night.